Hi, my name is Vincent Kona with the accounting department here at Free. In this video, I'm going to show you how to review the actual to budget by cost center report step by step. So let's get started. Please go to the web version of UBW. On the main home screen, you're going to see tabs to your left. It's important to note that menu access is based on your role, so it's not unusual to have your menu options look slightly different than what you see here. Some of the great features of the system include accessing recently used forms or reports. You can see down below here the last 10 reports or forms that I've accessed show up under the recently used section. You can also add a report or form into your favorites, which will show at the top right of the screen. This is done by clicking the heart icon when you're actually on the form or the report. Example, if I was to click on this particular form, the heart icon is right here, and that will save that to show up on my favorites on the home screen. Unlike the recently used menu, favorites are not replaced when you open new ones. They'll stay on the list until you remove them. So let's navigate to the menu to click on the Reports tab. Click on Division Reports, and then next click on Statements, and you'll see the report called Actual to Budget by Cost Center. Once you're on the Actual to Budget report, you'll notice there's some selection criteria that needs to be entered. To touch on the cost center criteria first, you have a few options for the report. In the cost center box, you can just enter the 5-digit cost center number for one of your programs, and the activity for that cost center only will come up. There are also 3 dots next to the cost center box that bring up a search criteria lookup. This is ideal if you're unsure what the cost center number is, because you can find the cost center number by adding the cost center name in the lookup and clicking search. An example, if I put in Atlantic, if I was not sure of Atlantic's cost center number, I would type in the name, click search, and Atlantic comes up. Finally, you can leave the cost center box blank and just click search, and this is going to bring up the activity for all of the cost centers that are under your management. So the results will be grouped by, they'll be grouped and totaled by cost center. It's important to note, if you're responsible for multiple cost centers, this is not the ideal option because it can be very difficult to read through all the activity. The second criteria is the period. In UBW, the period is expressed as the year first and then the applicable month. For example, January 2023 is 2023-01, February 2023 is 2023-02, and so on and so forth. The report does default with the month of 00, you can see that here, which is really just the initial reporting period for the year. Finally, it's important to remember that the accounting team closes each period on the 15th of the following month. For example, the period of June 2023, which is displayed right here as 2023-06, would not be closed until July 15th of 2023. So if you query the June period prior to the July 15th close date, you could be missing revenue or expenses that are important for your review. Now, once you enter your cost center in the applicable periods, you can click on the blue search button and the activity will show up. I'm going to enter a cost center here and click search. Below, you'll see the report appear. Notice the column labels and the financial data. I'll give you a brief description for each of these columns. The first column is the report grouping column, which is used to summarize the account activity. These groupings are commonly used throughout our reporting to easily capture data by total groups such as revenue, salary and benefits. Other expenses relate to general expenditures. Property and equipment or expenses like mortgages or insurance. If I just clicked on the next page here, there's a grouping for allocated expenses, and those are indirect charges for program or agency administration that are charged to each of the programs within the agency. Just go back to this report beginning. The account groups are utilized to summarize the accounts, and for purposes of this particular report, it's really used for sorting. Otherwise, the accounts would be displayed alphabetically, and it would not be a friendly report to view. The next column is the GL text. So the GL text is just the text associated with an account number. An account number is a number that's used to categorize financial transactions. Examples include Medicaid. For example, Medicaid billing for each cost center is accounted for in a revenue account called Medicaid revenue, which the associated account number for this is account 40210. Jumping down to some expenditures, food expenditures for applicable cost centers are accounted for in an account called food. The account number associated for food is 66120. So you kind of get the idea. There's an associated account number which summarizes the financial transactions, and this is the associated text that goes along with that account. The next two columns are the 5-digit cost center number and the cost center text. The next column is the actual YTD, which stands for actual year to date. This column is showing you all of the earned revenue and expenditures incurred for this cost center year to date. Next is the budget year YTD, which stands for the budget year to date. And this is the estimated year to date budget for the cost center, not the budget for the entire year. So for this report, we ran it from the beginning of the year through June. Your actual YTD and your budget YTD will be for the time period of the beginning of 2023 through June. The last column is the change over budget, which is the variance between the actual and the budget columns. So a couple of important things to note about this report, which actually pertains to other financial reports that are in the system. Revenue accounts show up as negative numbers and they're displayed in red. These accounts are shown as negative numbers due to the mechanics of bookkeeping adopted by the accounting field. It does not have the same meaning that we normally associate with negatives, meaning it does not indicate a loss or represent an undesirable result. Expenses, which are down below here, show up as positive numbers, which are displayed in blue. There's a few negatives here. That actually means that there's some misbookkeeping there, but generally speaking, expense accounts have positive numbers and they're displayed in blue. And again, this is due to the mechanics of bookkeeping adopted by the accounting field, similar to the revenue. I'm just going to click to the next portion of this report. When reviewing the report, you can see I went to the end of the report. A bottom line, which is all the way here at the end of the report, in red means that the revenue was greater than the expenses. That would mean this is a good result. Revenue is greater than expenses. The report compares actual to budgeted results for the time period entered into the criteria, so you really have to look at those negative and positive differences to consider whether the variance is good or bad. In this case, our actual year-to-date total is a surplus of $51,000, where we budgeted or anticipated a loss of $27,786.60. So we're better to budget by $79,334.44, just as an example of navigating through the report. A few other things, important accounting terms to make note of when running and reviewing these reports are as follows. The first term is accrual. All of our financial reports are accounted for on an accrual basis. This means that revenue is recorded when it's earned. That is, when we have substantially completed our obligations. Expenses incurred in the course of earning that revenue must be recorded in the same period as the revenue. The second term is deferral. When cash is received before we've met our obligations, it's not recorded as revenue. It is deferred until the obligations have been satisfied. Similarly, expenses paid with a benefit for a future period are also considered deferred. The third term is allocation. These are indirect or shared expenses that spread to operating cost centers on a rational basis. A key aspect of allocated expenses is that they generally cannot be controlled at the individual cost center level, but the cost center benefits from the expense. Management therefore determines a fair method to spread these costs. And a few examples are as follows. Costs of utilities for a building are spread to the applicable programs that use the building based on square footage. Another example, the cost of Kronos, the Kronos software, is spread to programs based on the number of employees. Another example is agency administration, which is a special type of allocation that is used to spread the agency's administrative costs such as accounting, HR, compliance, etc. The basis for this allocation is completed using a ratio value percentage, which is really just the cost center costs as a percentage of the total cost for the organization. Finally, we have depreciation, which is an accounting tool that allows the expense of a major purchase, such as a building, a vehicle, to occur over the time it will be used instead of recording the expense in full on the date of the purchase. Another great feature as you navigate through the report is having the ability to drill into the accounts and obtain additional details. So once you're zoomed in, you're able to drill right down to the supporting documentation attached to the related expenses. So if I was looking at this particular line for food and question some of the charges here, I could just click this hyperlink for the amount, and it brings up all of the transactions that make up that total. And if I click the transaction number here, I'm able to drill right down to the supporting documentation, such as a receipt or an invoice. So I'm just going to go back here. Understanding the various transaction types are also very important when you're drilling into the report and navigating through this report. So scrolling to the top, you're going to see this TT, which is really the transaction type that UBW uses to help identify the source of a transaction. IO, which you see down here, that's the one we just clicked on, indicates that the expense originated from an invoice, and this would include transactions made on purchase cards. If you click the transaction number as we did before, you'll be able to drill down to the receipt of the invoice as we just did before. Other transaction types, GL, these are transactions that are entered mostly by the accounting department. They can represent a few different things, accrual-related entries and or other various accounting entries for revenue and expenses not yet invoiced or corrections of past posting errors. Another transaction type that you might see when navigating through the report is RV. And RV are transactions that were reversed. These mostly pertain to GL transactions, right? An accrual entry that was done with a transaction type of GL may have an associated RV transaction type reversing that. On the revenue side, if we were to click in here, there's a transaction type you may see, SI. Those are transactions that come from sales orders in the billing system, which basically mean we invoiced a customer, we sent a bill to a customer. Some other transaction types in the report as you navigate would be PP, which you'll find under payroll transactions, and AL represent allocated transactions. So those are just some of the various transaction types you'll see when navigating through this particular actual to budget by cost center report. how do you read the report, right? When you're reviewing this and you bring this up for your particular cost center for this time period, you want to look for any large variances from your actuals to your budgeted totals, right? So that indicates that there might be something that either was not anticipated or something that is not right. And if you want to drill into that further, you can check to see if the charge doesn't belong, right? You can drill into the specifics of the transactions and validate the documentation supporting it. It's always good to review and understand the actual spending and any fluctuations so you're aware of the cost and spending within the program. Understanding these concepts allow for discussions supported with actual financial data. As you scroll to the bottom of the screen, we touched on this earlier. At the bottom of the report is known as the bottom line. So in this particular case, you'll see that revenue exceed expenses, which is really a great result. So that's all I have for this report. Thank you for taking the time to go step by step with me. If you have any questions, please don't hesitate to contact the finance group. And that's it. Thank you.